Good day, traders. I trust you are well. Welcome to Price Action Profits. I want to talk about this trade that I took here. I'll open it up shortly, but just before I took the trade, this is what the market looked as for me. This was the low of the previous day, low of yesterday, which was the low of Thursday. Remember, I always mark the lows and the highs of the previous day. So that's a key level of resistance for me. And that low at that point was the low of the European session. So those were key levels that I knew the bears would like to get past and smash through the low of the European session and also get down and break through the low of yesterday. And who knows how far the selling would go after that. So that was kind of the high level setup that was in the market. Now, as I was considering taking the trade, this is what had been forming. So, we had a beautiful, distinct range here. Remember, everything always looks clear after the fact, which says to us a couple of things. If we are not clear, we must wait until things get clear. If our strategy calls for us to take a setup, we must take the setup without waiting for things to be clear, because that's what this strategy has said. The strategy has become clear enough, so then you must execute, right? Hope that makes sense. So seeing this trading range, I've spoken about it, and you can always go to video number 1 in Price Action Profits to have a look at this. Measured move of a trading range. I always put that in to say if the bulls are strong, they want to break out and get to a measured move of the trading range. Now, in this particular case, the bulls attempted to break out here, but failed to break out. The bears attempted to break out here, failed. If the bears had broken out here, that's the other side of it. I would have, let's put this in the correct place at that point in time. That was the low. So if the bears had broken out beneath that, I would have thought, oh, the bears want to come and test the low of the session. Not enough, pressure built in here to get past it, but they might get there, go sideways, and then smash beneath that. Or the bulls might come back, defend that. So if the bulls let go of control here, they could just come back and defend this level where they created a breakout. Similarly, of course, like I was saying, if the bulls are strong, they would break out, and the bulls need to get at least to a measured move, and the bears would come back into the market. This tells a lot of stories. Good candle we have here with news breakout to 30 non-farm payrolls. So they had an opportunity to accelerate up. Good for the bulls, but why do we have the tail? Follow through. Why do you have the tail? Fail breakout above the range. So now I'm thinking maybe the bears are strong, will come back. But the bulls came back again. Beautiful candle for them, closing above all of this hesitance. And follow through, but we got to the measured move. At the measured move, the bulls are strong, either get through it or sideways, and then keep going up. But they failed. So I'm thinking, okay, we have this low, this huge magnet, low of the day. The previous day was a pretty strong bearish day. If you go look on the Thursday market, big candle, red candle, bear candle. So maybe the bears are going to try and sell into the US session, which opened about, that's the open of the US session. So I'm thinking maybe the bears will come in the US session, try and get down to that low and sell off because the bulls are failing. So at this point, I am prepared to sell. Okay, so everything that follows me is trying to see rationale to sell. Bulls try once, fail, second time fail, third time fail. So 3 pushes, wedge variation. I cover this in the course in quite a lot of detail. Coming out of that, this is a good candle for the bears. I have a problem with an outside candle in my reversal structures because it's just a trading range. It's a variation of this in a sense. So I just want to see a little bit more price action before I sell. But I'm thinking selling. We're back in the trading range. Good for the bears, these candles. So when I got that, I said, okay, it's time to sell. Decide where you put your stop and manage it. By the way, I discussed the stop in great detail in this 3-month subscription that is offered by Actions to Wealth Office after my course. So you can get in touch with the office. They will tell you more about that. So I'm thinking to sell, and boom, as soon as that starts to accelerate, I sell at the market. I could have used an order, but I prefer to sell at the market because I'm there. I'm not going anywhere. And now, having sold at the market, I'm watching this and that. I want to see if the bears are strong enough to break beneath this. And if they are to break beneath this, then hopefully we'll get a lot more. Then we can start to consider all of this as a huge trading range. And if the bears are strong, then if we break out beneath this, I'm kind of thinking if the bears are strong, then we can get to the measure and move all the way down here to the core of the earth. But you got to wait and see, but you got to think, right? So that's what I'm thinking. So I got that. I got disappointed with that. And I was saying, come on, bears. I mean, you've got two beautiful candles. You got a nice reversal pattern. Why are you hesitating at the trading range? Because that's the first problem. But I waited to see, and I said, okay, good for the bears. Variation of breakup pullback low one. I'm not jumping in here. I've already taken the trade. It's not a clean enough for me to take as a low one trade. So I'm going to watch and wait and see how far we go. Then we got that, and I said, fantastic, beautiful, good for the bears. Concerned a little bit about the tail, but let's see if the bears are strong enough to accelerate down. And they were, and this time I'm saying, this is it. This is the day that I'm going to make my profits. This is the day the Lord has made. I'm going to make my profits. But as I was concerned about these tails, I was concerned about that tail, I was concerned about that tail. And the reason I say I'm concerned about the tails is because I'm in the market. I can see big bear candle. I can see bulls buying in the close. Big bear candle, bulls buying in the close. Big bear candle, I can see them buying to the close. If this tail had been created when the candle opened, went up, and it was selling all the way, it's a different matter. But if you are watching, it's quite fun to see what's happening. It's controlled by the bulls. So I'm a bit concerned. At the low of yesterday, all the bears needs was just to give us one solid candle beneath here and give every other bear reason to jump into the market. This stage, I'm saying, might fail. Be prepared for possible failure to take your profits. And I got that and I realized, okay, big problems. The low of yesterday fell, breakout low of European session, low of yesterday, bulls are strong. Bulls that bought into the close came up with that beautiful candle. So I am ready to get out. If I see another bull candle breaking out above this, I am out of the market. And boom, that's what happened. As soon as that bull candle took out that candle, it meant that the bulls have erased this. This might as well not have happened. Market might as well ended here and accelerated up. So I don't want to be in a market where my target has just been neutralized. The magnet has been neutralized. I'm not just in just to hold on. So when I saw that, I got out and I banked my profits, and this is what happened the rest of the day. And I could have gotten in that time, but Friday night, I am gone early. That was my last trade. All right, guys, I trust you enjoyed that. And I mean, of course, if you want more, you know what to do, get in touch with the Actions to Wealth office, and they'll tell you how to get more of my course. Name is George Nyabadza.